Guess what? Trump gave a tax cut to the banks. What a surprise. Welcome to Jaron Lukas Live. This is a live show on YouTube. And if you're watching live, hit me up in the chat while we talk about this. We're going to be talking about how Trump is giving tax breaks to shareholders of large banks. We're going to look at some stats that prove it. And we're going to talk about what our country needs to do from here. So thanks for joining, and we'll see you in a second. All right, coming into it here. Here's the headline. Big banks have saved $32 billion from Trump's tax cuts, report says. And yeah, that's a lot of money, isn't it? Especially when you look at, we have $20 trillion in debt. And while $32 billion alone isn't going to get rid of it completely, it is a pretty substantial chunk. And when when we as a country are making decisions where, $32 billion goes to the banks, we're going to see a little bit later, a lot of money is going to the upper 1 and 0.1%. And I think you're going to be shocked when you see this chart. I really mean that. So stick around for that. And if you're interested in these topics and want more people to see this on YouTube, help me out in the algorithm, hit that like button, and talk to me in the live chat if you're watching live. If you're not watching live, hit me up in the comments. So going into this is all part of the tax bill that was passed, which if you're American, you may remember. Not all of my viewers are American, but I think most people will be interested to hear about this new level of corporate greed that's happening on Wall Street, funded by the White House. So if you remember, this was a tax cut that was focused on helping the middle class. The middle class definitely needs help. So in theory, this is good. But what happened is that the nation's 6 top banks saved $18 billion in 2019 and $32 billion total since it was passed in 2018. So Trump, of course, hailed this as a middle-class miracle. There's going to be a really funny quote from Trump that's in this article too, by the way. And this was all a report from Bloomberg, where I read the original, but when I tried to open it on my computer, I got paywalled, and I refused to cover news articles and news websites that are paywalling people. I recently canceled my Wall Street Journal subscription. This was, for me personally, I've been reading the Wall Street Journal since probably high school, but definitely since college every day. And I was very disappointed by one day I look at my Wall Street Journal bill and I'm being charged $30 a month with no notice. Never had I paid anything like that. It was probably like $1 a month or $5 a month. And then without any notice, and then I call Wall Street Journal and I have to be transferred to 3 different departments to cancel my subscription. So that is why I'm no longer covering websites that are paywalling people, because I'm looking at the corporate practices that are happening within. That one probably being, we've all had a lot of bad cancellation calls. Am I right? The only good ones I find are actually from Amazon. That can be for another time. But having to call period is a huge mistake. To make people do that, and transferring us to 3 departments doesn't work. So moving back to the topic at hand, but I think this all plays into a similar corporate greed that we're seeing mostly from corporations run by boomers. And I want you to remember that. And if you're a boomer watching, take note. So the nation's 6 top banks. By the way, this is only 6 banks that we're talking about with these $18 and $32 billion numbers here. Very short period of time, and only 6 banks. There are many, many more banks than that. So what happened here is that the effective tax rate for banks this last year fell to 18%, compared with 20% a year before and 30% before that. And this is all again from the new tax law. Now, here's the funny quote from Trump. At a signing ceremony for a partial trade deal with China on Wednesday, Trump called on several bank executives directly as he touted his economic policies, including tax cuts. He asked Mary for short, the head of JP Morgan Chase's asset management unit, to thank him for incredible earnings in the fourth quarter. They were very substantial, Trump said at the ceremony. Will you say thank you, Mr. President, at least? I just can't even believe it. And he goes, will you say thank you, Mr. President, at least, huh? I made a lot of bankers look very good. And that quote really sums it up, doesn't it? I imagine that most of you watching have pretty strong opinions on these kinds of topics too. And this sentence alone is a problem twofold. First, he's supporting the bankers. Like, of all the people that we need to be supporting here, don't start talking about how you're making bankers look good. Like, put them on the defensive, make them cut their profits, make them actually start lending to the middle class. And that was the number one problem with this tax bill as it affected banks. Is the theory that was being talked about a couple of years ago is that banks would start growing their lending. It's trickle down. And what I want to say is that trickle down economics isn't like across the board bad. It depends on what your tax rates are at the time and many other factors in the economy. So if there's a curve, it's called the Laffer curve. And if you're on one side of it and you cut taxes, you will cut government revenue. And if you're on the other side of it, like you have 70+% tax rates like we had in the 70s, and you cut tax rates, then, well, yeah, that does have an effect because your tax rates are too high. So there's a balance here. The problem is that banks aren't lending to the middle class. What's been happening, and I've really seen this firsthand over the last 5-8 years, ever since I started a fintech company and I was essentially running a bank. What I found is that banks have too much risk now. From a regulatory standpoint, it's in law, and it's given them a lot of risk to lend to the middle class. That's one thing that needs to change. But the problem is that at this point, even though we've changed it, we've created a culture in society where banks aren't just going to start lending to the middle class. They're freaked out that a recession's coming and they don't want to lose money like they did in the last one. So we have this real problem where there's a deep cultural problem for banks lending, and the most ideal loan that a bank can make would be like $100 million real estate loan in a low risk property, because it's a large amount of money. They just want to get this money lent. So if you're doing this to either like a bunch of $300,000 to $500,000 homes, or in one deal $100 million, you're going to choose that every time. So what's happening behind the scenes here? The highest people at banks are lending to their friends, and this may or may not be a surprise to my friends out there watching me explain this. But that's the real problem. And you got to take that with a grain of salt too. And just recognize that all parts of the economy are run by like usually a handful of 5 people. The internet's run by pretty much 5 companies at this point. And the internet itself, the underpinning, is controlled by 13 people. 13 people literally control the technology of the internet. So yeah, you can go research that later. It's gnarly when I found that out a few years back. So the problem here is that if we actually want to help the middle class, cutting tax rates isn't going to do it right now. There are other cultural changes that need to happen in banks, and they need to be allowed to lend to the people who really need it now. So yeah, that was the first area where Trump kind of like really messed up here in saying this. The other is just, it's so freaking cocky. How no one who is an actually kind of well-meaning, compassionate, good person talks like this. So that's the other part. I'm not the first person to say that. Combined profits at the 6 banks have jumped in recent years, coming in at more than $120 billion in 2018. And when I read this one, my first reaction is that this is just pure profit that is going to banks in a system that is ripe for destruction. There are many obvious trends that people are talking about that might displace banks, but the real fact here is that profits aren't necessarily bad. It's that we are supporting more profit making that's only benefiting the rich, which I'm going to show you a chart very shortly here that supports that. And it's all for something that is becoming, through technology, less and less needed. Most of the reason why you have to pay so much for any sort of online payments or payments in general is because of regulatory requirements, by the way. So, like I mentioned, one of the real changes that needs to happen here is a regulatory change, but it's also digging in, which, by the way, Trump knows nothing about. Let's just be clear about that. And beyond that, it's more cultural changes. And those are ones that are clearly not intended to be made in this administration because, he made a lot of bankers look very good. And that's his goal here. So one of the other interesting things that this article goes into is that this tax package delivered benefits that were even more generous than expected to the ultra wealthy. And here's where we get into that chart. And so this is from the Congress of the United States Congressional Budget Office. This is a fairly nonpartisan chart here. And it says the projected changes of distribution of household income 2016 to 2021. Okay, so, and I want to show you just average annual growth in inflation adjusted household income. So this is growth in income in whatever income level you are currently at. How much should you grow the next year? Before the taxes, you can see it was almost a U shape, not helping the middle class, not really helping the lower class either. Because if you look at the top 1% and the top 96% before that, I mean, they're just crushing it. And what's amazing here is I want you to look at the right chart, the pink chart, and what you'll see is that income growth actually went down for the poorest people here. That's what the middle class tax package did. And in line with that, as you'll see, the top 1% grew substantially. It went from 2.5% to about 3.2%. And same thing happened with the top 4%. Same thing happened with the top 10%. So what we did is we literally exponentially added to the wealth gap. And if you haven't caught it yet, I did another video on this recently talking about the wealth gap and a solution that I have for it that directly affects banks, actually. My belief is that interest rates are too low and they need to go up. And as soon as that happens, there will be a great wealth redistribution through the market economy. No socialist needed there. But if you're socialist and watching my channel, I still love you. Hit that like button. Let me know you're socialist in the comments. If you're capitalist, talk to me live. Or if you haven't, actually, if you're catching a recording of this, make sure you subscribe and hit the notification bell so you are notified when I'm going live. I'm going live every Monday through Thursday. And for those of you who are already tuning in, I see we got a few of you right now. I want you to know that I really appreciate you joining me live, taking time out of your day to do this. Hit me up in the comments if you have any opinions on what I'm talking about. And yeah, I really appreciate you. So this is the chart that I think is probably one of the worst ones I've seen in a long time. It really goes into this issue that I'm starting to talk a lot about on the channel, which is the wealth gap, inequalities that are really being promoted. And most of the government right now, most of the people in power, most of the corporations do not give an F. And that needs to change. So we need more people who are millennials, Gen Z, talking about this stuff, like actually making a change. And I guess that's why I'm doing this episode today, because we have a real choice in our generation. And there are going to be money powers at play that are moving in the same direction that we've been moving, which is keep wasting, keep being unsustainable, throw it off on future generations. And the millennials are going to be a tough one, because millennials really do care about these issues. But at the same time, a lot of the people who are going to be in power are children of people who are in power right now. And they're going to have a lot of financial interests in keeping that system going. Imagine that, your parents owned a pharmaceutical company, or they owned a bank, or they owned a paper mill. Like, those have very strong interests against creating the changes that we want to see. So it really takes more people speaking up about it. That's why I'm doing this video today. And I really encourage you to talk to more people about these issues and really push people. Like, if they are kind of on the borderline or kind of on the fence, like, really push them to consider the fact that it takes decisions being made by us in order to make things happen. This final article I want to show you here, this kind of really ties it all together. And we have this 32 billion that has been made by banks. Where did it go? And it went to buybacks. If you don't know what a buyback is, it's when a public company buys back their own stock, reducing the supply of stock that's currently out there. So, for example, if they bought back $1 billion, they've been buying back way more than this, but if they bought back $1 billion worth of stock, that means that a shareholder got $1 billion at the current market price, and it has an effect by reducing the demand and increasing the profits over the total amount of shares that are out there, of actually raising the share price. So all the stockholders are benefiting, while middle class isn't getting lent to. The poor, I don't know if I already showed you this, but this chart's pretty sad. And so we're definitely not helping anyone below the top 10%. And I guess that's Trump's definition of middle class, because, if you've never been there yourself, which frankly I haven't, but I grew up middle class. Like, I grew up kind of on the upper side of it, but if you've grown up with immense amount of wealth and live in New York City, your definition of middle class might be a little different than the majority of people in America. And that's all I'm saying, is that the real middle class did not benefit. Well, they actually did benefit slightly, but if you look at inflation, if you look at housing prices, all these things that are coming in play, and then you look at what part of the middle class we're talking about here, most people did not benefit. And what I can tell you is that these charts are also a lagging indicator. So when the 1% goes up on the right on this side, what happens is that they make more money, then they buy more assets, including stocks, real estate, minerals. And there's a lag that happens here where, as they're pushing up the prices, trying to bid on these new investments, it then transfers into increased price in everyday goods. So that further hurts the middle class, the lower class. And so if you're looking at this chart and saying, well, hey, this middle quartile didn't do too bad here, about the same. No, just wait a year where inflation keeps kicking its head, keeps turning because of debt fueled. These top 1% right here, they are getting all the bank loans. So they are taking all the bank loans and then they're buying all the assets and pushing up the prices for everyone else. That's what's happening. You should be upset. So that's what's happening. Banks are playing a big role in this, and it's currently pretty bad. So what do we need to do? We need to elect people who are actually going to change policies. Socialism isn't going to be the answer. That's where most of the Democratic Party right now is pushing. They're actually going really left at a time when they need to be selecting a middle of the road candidate, someone with a new message, someone who's maybe got a little libertarian in them. And most importantly is going to push policies that kind of even out the playing field for real. And the way we do that is actually, although technically the White House doesn't control interest rates, but they have some influence. And what we need to do is actually raise interest rates, because that's going to start to flatten out this entire curve. Just wait till assets that have been pushed up by more and more debt going to the upper class actually start to unwind. Then things are going to become much more stable. Housing prices are going to come back to normal. The price of corn and metals and glass and all these things that we use to live are going to come down, but they also need to become more sustainable. So really what we need is a whole new, probably political party. I'm not sure yet. Let me know what you think in the comments, but clearly a lot of changes need to be made, and that's going to come down to our generation. So with that, thank you so much for joining. Go check out another video. I mentioned the one where I actually start to talk a little bit more about my solution on how interest rates will help actually level all this inequality that we've been having over the last, I don't know, it's been growing for a while now. Definitely at least 20 years is when it's been getting really bad. And so go check out that video. If you are not joining me in a live stream, I appreciate you. Talk to me in the comments, but come join me in a live stream sometime. Hit me up, and I appreciate you. Stay visionary.